You walk into a bank, the same bank you have walked into your whole life. Same building, same logo, same tellers behind the same glass. But you are not the same person to them. Not even close. There are 4 versions of you inside this building, and the bank knows exactly which one you are the moment you sit down. This is what the bank actually is, not a service, a sorting machine. Let's start at the bottom. You have $0, or close enough that it doesn't matter. You grew up watching your parents work every hour they had, and it still wasn't enough. Money was a problem to be managed, not a tool to be used. So when you opened your first bank account, you weren't building wealth. You were just trying to stop the bleeding. And the bank had something ready for you, a monthly maintenance fee. Not because you did anything wrong, just for being there. $12 a month, $144 a year, just to have an account, while the bank lends your deposits out at 8%. It charges you to hold your own money. Then come the overdraft fees, $35 for spending $6 you didn't have. The system is designed so that being poor costs money. Not by accident, by design. The bank's most profitable customer is not the wealthy one. It is the person barely making it, paying fees every single month without fail. You are a revenue line. Now let's move. You save, you grind, you get to $50,000. That took years, more discipline than most people will ever know. You walk back into the bank. Something is different, slightly. The fees disappear. Your balance clears their minimum threshold. Suddenly, they don't charge you to exist. They offer you a credit card, a better one, points, rewards, a slightly higher credit limit. They suggest a savings account paying 0.01%, while inflation runs at 3%. Your $50,000 is quietly getting smaller every year inside their product. They tolerate you at $50,000. They are polite, they smile. But you are not important, not yet. You notice something, a door to the side of the lobby. Nobody mentions that door to you. You keep saving, you keep investing quietly. Years go by. You tell nobody. You drive the same car. You wear the same kind of clothes. But the number in the account is different now. $500,000. You walk back into the bank. Same doors. And this time, something is genuinely different. A person meets you at the door. Not a teller, a relationship manager. That is a different title. They use your first name. They remember things. Your birthday, a goal you mentioned once. They walk you through that frosted glass door. A private room, real chairs, good coffee. No queue, no number ticket, no waiting. They offer you a mortgage at a lower rate. Access to investment products you didn't know existed last year. A wealth manager who calls you. You do not call them. The tone of every interaction changes. It is warmer, more careful, more considered. But here is what you start to understand. They are not being kind. They are being profitable. At $500,000, you are worth managing. 1% of your assets under management per year, $5,000, paid quietly. The service is real, but the fee is real too. You are being managed, in every sense of that word. Now, $5 million. This number is where the bank stops being a bank. In the way you understood a bank, you do not go to the bank. Someone comes to you. They send a senior private banker, not a rep, a senior banker. They bring things, estate planning documents, tax strategies, access to deals that are not advertised, infrastructure funds, private equity, real asset vehicles, rates the branch on the corner will never quote you. Concierge line you call any hour, someone who answers. At $5 million, the bank is paying attention to you in a way that is almost uncomfortable. They curate things for you. They anticipate, because now you are not a customer. You are a counterparty. The money you bring funds their operations, feeds their lending, grows their balance sheet. Losing you is a real cost, so they do not let you leave easily. Now let's pull back and look at what the tiers are actually sorting. Because it is not just service levels. It is access to information. That is what changes most. At $0, they tell you nothing. There is nothing to discuss. At $50K, they tell you about their products. At $500K, they tell you what the products are built on. At $5 million, they tell you how to use the products to move wealth forward and backward across generations. The game is the same game. The rules you are shown depend entirely on where you stand. This is not about malice. It is about incentive. The bank is not your enemy. It is a machine, and machines serve who feeds them. At $0 you feed it through fees. At $50K you feed it through your deposits. At $500K you feed it through your assets under management. At $5 million you feed it through your influence, your referrals, your network. Every tier has its payment method. The question is whether you know what you are paying. Now let's talk about what most people miss entirely. Inflation. The bank's savings account gives you 0.01%, while inflation silently takes 3%. That gap is not accidental. It is the spread, and the bank lives inside it. They borrow your money cheap. They lend it expensive. This is the mechanism, running every hour of every day. The people at the bottom of the ladder pay the most for this, in fees, in missed returns, in time. Time is the one thing the bank does not give back. The quiet way out is not to fight the bank. It is to understand it well enough to use it correctly. Park only what you need in the bank. Move the rest to where it compounds. Index funds, low-cost ETFs, assets that grow while the bank pays you almost nothing to wait. Every month, quietly, without telling anyone. The bank does not want you to know how close the exit is. Because as long as you stay afraid, you stay in the account that charges you a fee for the privilege. Fear is the product they are actually selling you. Security from what? From the very risk that builds wealth. The people who built real wealth understood one thing early. The bank is a utility, not a strategy. Use it like one. For liquidity, for safety, for the basic mechanics of moving money, and then let compounding do what the bank does for its wealthiest clients. Quietly. The gap between the $0 account and the $5 million account is not personality. It is not effort. It is not luck. It is information and time, applied consistently. The machine was not built against you specifically. It was built to extract maximum value from whoever sits inside it without knowing how it runs. Now you know how it runs. You will still use the bank. You will use it on your terms. Minimum viable deposit, maximum investment elsewhere. The number that changes how the bank treats you is not a secret. It is a direction. Keep walking toward it. Not financial advice, just the architecture laid out. If this landed, the next video is already waiting. It is about what the bank does with your money the moment you deposit it.